Hi, in this video, we will solve the example sums on the topic of journal entries for issue of debentures from the point of view of redemption. So let's go to the example sum 1. Example sum 1. We are asked to pass journal entries for issue of debentures in each of the following transactions. We have 5 cases given to us, and we need to solve each case separately. We will begin with the first case, case 1. Case 1 says A Limited issues 30,000 10% debentures of 100 each at a discount of 5% to be repaid at par at the end of 5 years. So let's make a few notes. Number of debentures is equal to 30,000 debentures. The face value is rupees 100. It's issued at a discount of 5%. So the issue price is equal to rupees 95. And it's repaid at par at the end of 5 years. So redeemable price, redeemable amount rupees 100 face value. So let's go to the solution. In the books of A Limited journal, date/serial number, particulars, LF, debit rupees and credit rupees. The first entry is for the receipt of the application and allotment money, bank account debit to debenture, application and allotment account. Amount which has been received is 30,000 debentures multiplied by the issue price of rupees 95 per debenture. Comes up to 28,50,000 rupees. For debenture, application and allotment money received. The next entry, debenture, application and allotment account debit, the amount of the first journal entry, the application money received, which is 28,50,000 rupees, discount on the issue of debentures account, debit. The amount is 30,000 debentures multiplied by rupees 5 discount per debenture, comes up to 1,50,000 rupees to 10% debentures account. 30,000 debentures multiplied by the face value of rupees 100 per debenture comes up to 30 lakh rupees. 30,000 10% debentures of rupees 100 each issued at 5% discount and redeemable at par. The next entry, we need to write off the discount on issue of debentures, statement of profit and loss, finance cost, amount to be written off 1,50,000 rupees to discount on issue of debentures. Account 1,50,000 rupees for discount on issue of debentures written off. Case 1 is over. We'll view the answer. These are the first two entries. And the third entry for writing off the discount on issue of debentures account. We'll move on to case 2. Case 2 says B Limited issues 10% debentures of rupees 100 each for the total nominal value of rupees 40 lakh at a premium of 5% to be redeemed at par at the end of 5 years. Let's make a few notes first. The face value of the debenture is rupees 100. The total nominal value is equal to rupees 40 lakh. Hence, the number of debentures is equal to 40 lakh rupees divided by the face value per debenture 100 rupees comes up to 40,000 debentures. The debenture has been issued at a premium of 5%. Therefore, the issue price on a face value of rupees 100 is 105 rupees. And the redemption price, it's redeemed at par. So, the amount of redemption is rupees 100. So, let's go ahead with the solution. In the books of B Limited, journal, date/serial number, particulars, LF, debit rupees and credit rupees. The first entry is for the application and allotment money received. Bank account debit to debenture application and allotment account. The amount received 40,000 debentures multiplied by the issue price per debenture, which is rupees 105. 42 lakh rupees. For application and allotment money received. The next entry is for the issue of debentures, debenture application and allotment account debit. The amount of application money received 42 lakh rupees to 10% debentures account. Amount is the number of debentures issued, which is 40,000 debentures multiplied by rupees 100 face value per debenture, comes up to 40 lakh rupees. And 2, securities premium reserve account. $40,000 debentures multiplied by rupees 5 premium payable per debenture, 2 lakh rupees. Narration: 40,000, 10% debentures of rupees 100 each, issued at 5% premium, redeemable at par. The entry is done. We'll view the answer. The journal entries in the books of B Limited. Let's go to case 3. Case 3. Case 3 says C Limited issues rupees 50 lakh 10% debentures of rupees 100 each at par but redeemable at the end of 10 years at 105%. The total face value of the debentures is equal to rupees 50 lakh. Face value per debenture is equal to rupees 100. Hence, the number of debentures is equal to 50 lakh rupees divided by 100 rupees, which comes up to 50,000 debentures. The debenture has been issued at par, so the issue price is equal to the face value rupees 100, but it's redeemable at the end of 10 years at 105%, so the redeemable price is rupees 105. That is the premium on redemption is rupees 5 per debenture. Let's go ahead with passing the journal entries in the books of C Limited. Journal, date/serial number, particulars, LF, debit rupees and credit rupees. The first entry is for the debenture application and allotment money received. Bank account debit to debenture application and allotment account. Amount received 50,000 debentures multiplied by the issue price of rupees 100 per debenture comes up to 50 lakh rupees. For application and allotment money received. The next journal entry, debenture application and allotment account debit. The amount of application money received, which is 50 lakh rupees. The debentures are redeemable at 5% premium. So we need to provide for the loss as per prudence concept of accounting. So loss on the issue of debentures account debit. The amount of loss is 50,000 debentures multiplied by rupees 5 premium per debenture comes up to 2,50,000 rupees. 2. 10% debentures account. Amount is 50,000 debentures multiplied by the face value per debenture of rupees 100 comes up to 50 lakh rupees. And we need to provide for the liability. So 2 premium on redemption of debentures account. The amount of premium on redemption, which is 50,000 multiplied by rupees 5 per debenture, premium payable 2,50,000 rupees. Narration, 50,000, 10% debentures of rupees 100 each, issued at par and redeemable at 5% premium. Next entry, we will write off the loss on issue of debentures account. There is no securities premium reserve available, so we'll write it off from statement of profit and loss, finance cost. Two, loss on issue of debentures account. For loss on the issue of debentures written off. The amount of loss written off, 50,000 debentures multiplied by 5 rupees per debenture, 2,50,000 rupees. The entries are done. We'll view the answer. The first 2 entries. And the final entry. Let's move on to Case 4. Case 4 says D Limited issues rupees 60 lakh 10% debentures of rupees 100 each at a discount of 5%, repayable at a premium of 10% at the end of 5 years. So, face value of each debenture is rupees 100. The total nominal value of face value is equal to rupees 60 lakh. Therefore, the number of debentures is equal to 60 lakh rupees divided by 100 rupees comes up to 60,000 debentures. It's issued at a discount of 5%. So the issue price, after deducting the discount of 5 rupees from the face value, rupees 95, and the redeemable price, so redeemed at a premium of 10% at the end of 5 years. So 110 rupees. Let's go on to the solution in the books of D Limited. Journal, date/serial number, particulars, LF, debit rupees and credit rupees. The first entry for the application and allotment money received, bank account debit to debenture application and allotment account. The amount is 60,000 debentures multiplied by the issue price, rupees 95 per debenture, comes up to 57 lakh rupees. For application and allotment money received. Let's move on to the second journal entry, debenture application and allotment account debit. Amount of the application and allotment money received, 57 lakh rupees. I will debit loss on issue of debentures account with the number of debentures, 60,000 debentures, multiplied by the discount plus the premium on redemption. The discount is, the total loss will be equal to the discount, which is rupees 5, plus the premium on redemption, which is rupees 10, comes up to rupees 15 per debenture. So multiplied by rupees 15 comes up to 9 lakh rupees. To 10% debentures account, the face value of the debenture, 60,000 debentures multiplied by face value of rupees 100 per debenture, comes up to 60 lakh rupees. to premium on redemption of debentures account, the amount 60,000 debentures multiplied by the premium of rupees 10 per debenture comes up to 6 lakh rupees. Narration: 60,000, 10% debentures of rupees 100 each, issued at 5% discount and redeemable at 10% premium. The third entry, we need to write off the loss on issue of debentures. Statement of profit and loss. Account debit. The amount of loss 9 lakh rupees. To loss on issue of debentures account 9 lakh rupees for loss on the issue of debentures written off. The entries are done. We'll view the answer. The first two entries. And the final entry for writing off the loss on issue of debentures of 9 lakh rupees. We'll move on to case 5. Case 5. Case 5 says E Limited issues rupees 70 lakh 9% debentures of rupees 100 each at a premium of 5%, redeemable at 110% at the end of 10 years. So the face value of one debenture is rupees 100. The total face value is rupees 70 lakh. Hence, the number of debentures issued is equal to 70 lakh rupees divided by 100 rupees comes up to 70,000 debentures. The issue is at 5% premium, hence the issue price is 105 rupees and the redemption price, it's redeemable at a premium of 10%. It's redeemable at 110%. So the redeemable price is 110 rupees. We'll move on to the solution. In the books of E Limited, journal, date/serial number, particulars, LF, debit rupees and credit rupees. The first entry is for the debenture application and allotment money received. Bank account debit to debenture application and allotment account. The amount of application and allotment money received is 70,000 debentures multiplied by the issue price of 105 per debenture, comes up to 73,50,000 rupees. For application and allotment money received. The second entry, debenture application and allotment account debit. The amount of the first journal entry, application money received 73,50,000 rupees. We need to debit loss on the issue of debentures account. We need to debit it with 70,000 debentures multiplied by rupees 10 premium on redemption, comes up to 7 lakh rupees. 2. 9% debentures account with the number of debentures, 70,000 debentures multiplied by rupees 100 face value per debenture, comes up to 70 lakh rupees. 2. Premium on redemption of debentures account with the premium on redemption, which is 70,000 debentures multiplied by rupees 10 per debenture, comes up to 7 lakh rupees. And 2. Securities premium reserve account $70,000 debentures multiplied by the premium on the issue of debentures, which is rupees 5 per debenture, comes up to 3,50,000 rupees. Narration: 70,000, 9% debentures of rupees 100 each, issued at 5% premium and redeemable at 10% premium. Now, if we see here, we have a loss on the issue of debentures, 7 lakh rupees to be written off. There is an available balance in securities premium reserve to the extent of 3,50,000. So to that extent, we will utilize the securities premium reserve, and for the balance, we will debit statement of profit and loss. So the third entry is securities premium reserve account debit. Available balance 3,50,000 rupees. Statement of profit and loss. Finance cost. Another 3,50,000 rupees. 2. Loss on issue of debentures account. The total loss to be written off, 7 lakh rupees. Narration: loss on the issue of debentures. Written off. Entries are done. We can view the answer. The first two entries. And the final entry.